Are you struggling with the decision on whether to choose a survivor benefit plan for your federal pension in lieu of buying a life insurance policy to ensure your spouse has enough money to live on after you're gone? Which option will ensure they are taken care of and can live a financially stress-free life? Well, rest easy, my friends, because in today's video, we will discuss the pros and cons of each choice and provide you with valuable information that will guide you to the best solution for your particular circumstances. Making the right choice is crucial for your loved one's future financial and mental well-being and provides peace of mind for you both that they will be okay if you pass away before them. So without further delay, let's get the show on the road. As I stated in previous videos, I am not a certified financial planner or a professional retirement expert. I'm just a person that's gone through this process myself, and I want to provide you, my listeners, with accurate information that you can use to make an informed decision on what's best for you and your family. This is a critical decision and deserves your due diligence and time to ensure you make the right choice for your individual circumstances. Let's talk a little bit about what a survivor benefit plan is. It's where a portion of your federal pension is taken, a percentage, to pay for a pension benefit for your spouse if you should pass away before they do. So there's several options regarding survivor benefit plans, and we're going to talk about all three. The three options in the survivor benefit plan are 0%, which is no benefit, 25%, and 50%. You need to understand the benefits and ramifications of each option before you make a decision. Let's talk a little bit about the 0% option. 0 means just that. Your spouse gets nothing from your pension should you pass away before they do. The sole benefit of this option is that nothing's taken out of your pension to pay for this option since no monies are provided to your spouse. Some people choose this option solely for that reason. However, this could be short-sighted given your particular circumstances. There are a couple of things to note with this option. If you choose 0%, your spouse will be required to sign a consent form and have it signed by a notary acknowledging that he or she understands no pension benefits will be given. Also, if you wish to continue federal employee health benefits into retirement, you cannot do this option. You must choose either the 25 or 50% option to continue that coverage. If FEHB will be your only coverage, this could be a showstopper and not leave you much of a choice. 25%. So for today's example, let's say you have a pension of $5,000 per month before taxes. If you choose the 25% survivor benefit plan, the government will reduce your pension by $250 per month, 5% of your pension, so that if you pass away before them, your spouse will receive $1,250, 25% of your pension, each month for the rest of their life. Using the same scenario for 50% survivor benefit plan, should you pass away before your spouse, they will receive 50% of your pension, $2,500 per month, for the rest of their life, and the government will reduce your pension by $500 per month, or 10% of your pension benefit. A few things to think about before you make your decision, since it is permanent and cannot be changed at a later date. You need to know and remember that all pension amounts to both you and your spouse are subject to state and federal taxes. You need to ask yourself, does my spouse have their own pension, Social Security, 401k plan to fund their retirement appropriately? Are there any health concerns for the employee or their spouse? What is the likelihood of the spouse passing away before the pensioned employee? Remember, if you chose the 25 or 50% survivor benefit plan and your pension was reduced to pay for that option, if your spouse passes away before you do not get those monies back. They are gone forever. However, the government will no longer reduce your monthly pension to pay for future spousal benefits since none will be given. So now we arrive at the million-dollar question. Which is better for your particular situation? Choosing an SBP option that provides a monthly smaller benefit, or maintaining or even increasing your FEGLI life insurance to provide a lump sum nest egg for your spouse's retirement? There's some things you need to consider. Which one is cheaper and will cost less per month from your pension? Remember, survivor benefit plan pension will be taxed. Life insurance proceeds are not taxed. Can my spouse live on $2,500 a month, or do they need a lump sum to pay things off and be more financially secure? As you can see, there are a lot of factors to consider in this decision. Take your time, do the math, do the research. Be sure you arrive at a decision that works for you both. It's crucial that you both be on the same page to have peace of mind that you made the right decision. On a personal note, we found that it was significantly cheaper to increase my FEGLI coverage in retirement to provide a proper lump sum amount that would ensure my wife was financially comfortable with minimal risk. You may find that same scenario works for your situation, or your circumstances may dictate a different approach like SBP is a better deal. Make sure you choose the plan that's right for you. Well, that's about all we have time for today. I hope this information gave you something to think about and will aid you in making this very important decision. Nothing is more important than taking care of your family, and we wish you and yours the best life possible. Thank you for joining us today, and please do us a great favor by liking and subscribing to the channel. We look forward to seeing you next time, and as always, don't forget to do something amazing today.